Hey everyone, you might have been surprised to read the headline of this video, Rivian is making giant steps towards profitability, given all of the money the company's losing on the bottom line. In fact, if you look at this chart here of Rivian's gross profit margin, it was negative 188% in its most recent update. But what I will point to is look at the progress, right? As it has expanded production, look at that narrowing progress towards profitability. And that's what I mean by the company's making giant steps towards profits. In this video, I'm going to discuss how Rivian plans to bridge that gap between the hugely negative gross profit margin in its most recent quarter and its goal. Right here, the CEO is saying in their latest earnings call that we continue to target, or I should say the CFO, we continue to target positive gross profit in 2024. So you saw that huge negative number, but in 2024, they plan to be positive on that target. So they expect approximately half of the improvement will be driven by greater volume and utilization of their installed capacity. Our 2023 production guidance of 50,000 units implies doubling of capacity utilization, which will result significantly lower fixed cost per vehicle. Now, it's important to remember that Rivian has capacity enough right now to produce 150,000 units, but they're only producing 50,000 in 2023. That gap between what they're capable of and what they're actually producing is an opportunity. As they ramp up, they can reduce the fixed cost per vehicle because they're already paying for that manufacturing facility. They've already paid for building of that facility. They're already paying for power generation, for air conditioning, for maintenance and labor and all of that for those facilities. And so as they ramp up production, it's going to lower the fixed cost per vehicle. And they plan to increase production volume further in 2024. So half of the gap is going to be closed just by increasing output. The other half is going to be split between increasing the average selling price and the material cost reduction. So as they ramp up production, they're going to be able to negotiate lower prices for materials, and also commodity prices have came down considerably since the peak of 2021 and 2022. We also expect to realize commercial cost savings as they negotiate with their suppliers. The increase in average selling price is based upon the gradual improvements we expect to achieve as we complete the fulfillment of our pre-March 2022 order base. So Rivian is still delivering on orders that were placed before March of 2022. And people who placed their orders during that time reserved a price that is lower than the current selling price. So right now when Rivian is delivering those cars that were ordered back before March of 2022, they're recording a sale at that lower price. But as Rivian completes all of those orders from before March of 2022 and they move on to the newer orders post March 2022, those will come at higher average selling prices. And that's, of course, if you boost the selling price, you're going to get a higher profit margin if you keep costs the same. But actually, Rivian is lowering their costs. So that's a two-sided benefit here. They're lowering their costs and they're increasing the average selling price, which is making significant progress towards profitability. And I'll end this video with this final comment from CFO saying, I want to reiterate our confidence in our long-term financial targets. We see a clear path to our approximately 25% gross profit target and high teens EBITDA margin target and approximately 10% free cash flow margin target. These are long-term targets. And the 25% gross profit margin target and EBITDA target are realistic in my opinion if you compare, Tesla achieved those targets, right? Tesla at one point had gross profit margins approaching 30%, with operating profit margins approaching 20% at, before they started cutting prices and competition really got heated here late 2022 and early 2023, and Tesla's margins have come down. But they've certainly demonstrated to the rest of the industry that these types of profit margins are achievable at a certain scale, right? When you produce a certain number of vehicles. So these are the steps Rivian is making towards profitability, and they're making huge strides to the pleasure of Rivian stock investors. All right, that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.